Have you ever wondered why some perfectly honest people in Britain end up with frozen bank accounts, panicked phone calls, and letters from agencies they've never even heard of, all because they tried to be careful with their own money? What if I told you that the very instinct you think is protecting you is actually the one thing that puts a target on your back? Stay with me, because in the next few minutes I'm going to show you a hidden trap that's catching decent, law-abiding people across this country. And most of them never see it coming until it's far too late. Before we go any further, do me one small favor. Tap that like button, hit subscribe, and share this video with someone you care about, because what you're about to hear could genuinely save a family member, a friend, or a neighbor from months of stress they never deserved. That one tap costs you nothing, but it might save someone their savings. Now let's get into it. Picture this. You've just sold your old car for cash, or maybe your daughter handed you a thick envelope of notes as a birthday gift. Or perhaps you've spent years running a small business and finally decided to bank the money that's been sitting in your safe at home. It's your money. You earned it. You can prove it. And yet the moment you walk into that branch and hand it over, something invisible happens behind the counter. Your bank starts watching. Not because they think you're a criminal, not because they've got a grudge, but because the law forces them to. And here's the part that keeps me up at night. It isn't the watching that gets ordinary people into trouble. It's what they do next. That polite British instinct to keep things quiet, to spread the money out, to avoid making a fuss. That very instinct is the fastest way to turn clean, honest money into a locked account and a legal nightmare. Let me clear something up right at the start, because there's a myth floating around that comes straight from American YouTube videos, and it's doing real damage on this side of the Atlantic. A lot of people believe there's a magic figure, usually £10,000, and the second you cross it, a form is automatically sent to the government. That's simply not how it works here. That's an American rule. In the United States, banks are legally required to file a report the moment a cash transaction crosses a certain line. We don't have that. There's no button that gets pressed when you deposit more than a specific amount in the UK. So if you've been quietly worrying about a magic number, you can breathe out. That number doesn't exist here. But please don't hear me wrong. The absence of an automatic form does not mean nobody is looking. In fact, our system is arguably more dangerous precisely because it runs on judgment rather than fixed thresholds. And that judgment is exactly what you need to understand, because once you see how it works, everything else becomes clear. The whole framework sits on top of a law called the Proceeds of Crime Act 2002. People in the industry just call it POCA. Under that act, banks, building societies, solicitors, accountants, and pretty much anyone handling money professionally have a legal duty. If they know, suspect, or even have reasonable grounds to suspect that money passing through their hands might come from crime, they have to report it. And they don't report it to the taxman. They send it to the National Crime Agency in the form of something called a Suspicious Activity Report, a SAR for short. Now here's the key difference from the American approach. There is no minimum figure, none. A SAR can be filed on a deposit of £200 if the behavior surrounding it looks strange. And on the other hand, a perfectly explained deposit of £50,000 might not trigger anything at all. It isn't the amount that raises the flag. It's the story around the money, the context, the pattern, the vibe, if you like. So what exactly does your bank look at? Not a single number sitting on its own, but a shape, a behavior. The software running quietly in the background at every major bank is extraordinarily clever. It's built to hunt for one thing above all else: people who look like they're trying to fly under the radar. And this brings me to a word that has ruined more honest lives in Britain than almost any other. The word is structuring. Some in the industry call it smurfing, which sounds silly but describes a very serious problem. Structuring means taking a lump of money and deliberately chopping it into smaller pieces so it doesn't attract attention. 3,000 on Monday, 2,500 on Thursday. Another lot the following week, maybe at a different branch, maybe through the post office to mix things up. You think you're being clever. You think you're being cautious. The software thinks it's watching a criminal cover their tracks. And the tragedy is this: it cannot tell the two apart. It doesn't know you sold a caravan. It doesn't know your son gave you the money for a new boiler. It sees a shape, and the shape is exactly what it's programmed to hunt. Now I don't want to leave you sitting there terrified, because the truth is that the enormous majority of SARs go nowhere. Hundreds of thousands of them are filed every single year in this country, and most of them simply sit quietly in a database. Nobody comes to your door. Nobody grabs a penny of your money. You go about your life exactly as normal, and you'll almost certainly never even know a report was raised on you. A SAR is not an accusation. It is not a fine. It is not a tax investigation. Most of the time, it is a piece of paperwork that lives and dies in a filing system. And this is the part you need to understand. It is the doorway through which the truly serious consequences arrive. And once you see what those consequences look like, you'll understand exactly why I don't want you to ever give the system a reason to open that door. Quick pause here. If this is genuinely opening your eyes, do me a favor and drop a comment saying understood so I know you're following along. It helps this video reach other people who need to hear this before they make a costly mistake. Now let's keep going because it's about to get sharper. The first consequence most people have never even heard of, and it has quietly become one of the sharpest tools the authorities have in this country. It's called an account freezing order. These came in under the Criminal Finances Act 2017, and their use has exploded in the last few years. Here's how one works, and brace yourself because it's genuinely unsettling. An enforcement officer, which could be the National Crime Agency, could be the police, could even be HMRC, can walk into a magistrate's court and apply to freeze the money sitting in your bank account. Not the Crown Court, not the High Court with a senior judge weighing complex financial arguments. The magistrate's court. The balance only needs to be above £1,000. The threshold they have to prove is only reasonable grounds to suspect that the money might be recoverable, which in plain English means it might be linked to some kind of unlawful conduct. They don't need to have arrested you. They don't need to have charged you. They don't even need a conviction anywhere in sight. And crucially, the application can be made without any notice to you at all. The polite legal phrase for that is without notice, which really just means the first you'll know about it is when your card is declined buying petrol or your direct debit bounces, and the bank on the other end of the phone politely refuses to explain why. And that leads us straight into the second thing that catches ordinary people out. Why won't the bank tell you what's happening? Why the wall of silence? It feels almost surreal until you understand the logic behind it. There's a criminal offense in this country called tipping off. It sits under Section 333A of the Proceeds of Crime Act. If any bank employee tells a customer that a suspicious activity report has been filed on them, or that an investigation might be underway, that employee has committed a crime. And it's not a small crime. It can carry up to 5 years in prison. 5 years. So the perfectly nice person on the end of the phone, the one who can clearly hear you getting upset and frightened and confused, is legally gagged. They're not being difficult. They're not being cold. They physically cannot tell you what's happening, even if every part of them wants to. And so you end up in this awful, silent limbo. Your own money you can prove, money you earned, sitting locked behind a wall while nobody is allowed to say a single useful word. Let me tell you about someone I met through a bit of volunteering I've done with a local advice service. I'll call him Reg, because that's not his name, and I'm not in the business of exposing real people. Reg was 72, a widower, and he had spent most of his adult life running a small stall down at the market. Fruit and veg first, then bits of hardware later on. A cash business through and through, but every penny declared, every year's books tidy, everything above board. When he finally decided to close the stall for good, he had a decent sum of cash built up over the last couple of trading years, sitting safely in a locked box at home, because that's the way his generation always did things. He decided the time had come to bank it and shut the chapter for good. But his nephew, trying to be helpful in the way well-meaning family often are, said, "Uncle Reg, whatever you do, don't take it all in at once. You'll trigger something. Break it up. Be sensible." So Reg, bless him, went along with the advice. 4,000 one week, 3,000 the next. A bit through the post office, a bit at the branch. Over about 6 weeks, he emptied that box, thinking he was being cautious. What he was actually doing, in the cold eyes of the software, was a textbook example of structuring. His account was frozen, and because he had spread the deposits across so many small trips, he didn't have one single clean piece of paperwork saying, "This is 2 years of legitimate market trading." He had a shoebox of scribbled notes. It took him nearly 4 months, a solicitor he could barely afford, and a level of stress no recently widowed man in his 70s should ever have to carry just to get his own money released. And here's the painful part. If Reg had walked in on day one with a whole lot in his hands and a folder of paperwork tucked under his arm, the very thing his nephew warned him against would have been the very thing that kept him safe. So let me flip this on its head now, because I'd never leave you frightened without giving you the way out. And the way out is beautifully simple. It is, in fact, the exact opposite of what most people's instincts tell them to do. The rule is this. Put it all in at once and let your paperwork do the talking for you. Your paperwork is your armor. It is the single most powerful shield you have in this entire area, and almost nobody bothers with it until they desperately wish they had. Let me walk you through the 5 most common everyday moments where this really comes into play, because these are the exact situations where kind, honest people make the wrong choice. The first is when you sell something private and valuable for cash. A car, a caravan, a motorbike, a watch, a stamp collection, something like that. Say you sell your old car privately for £9,000 and the buyer pays you in notes. Completely normal, completely legal. The wrong move is to slice it up, pay in 4 now, 3 next week, the rest later. That's the road to trouble. The right move is to deposit the full $9,000 in one go and hold on to a proper bill of sale. Your name, their name, the date, the registration, the amount, both signatures. If the cashier asks where it came from, and they very well might, you give them one short, calm sentence. I sold my car privately. Hand over the paperwork if you have it. That's the end of the conversation. The money goes in. Your record is spotless. Nothing happens. The second situation is a gift from family, and this one trips people up constantly because of confusion around tax. Let's say your son gives you £8,000 in cash to help you out because he's had a good year at work. The reason really doesn't matter. There's a lot of nonsense whispered about this, so let me clear it up. In the UK, receiving a gift is not taxable income. You don't declare it, you don't pay income tax on it. It's not treated like earnings. The only tax that could ever touch it is inheritance tax, and even then, only if the person who gave you the money passes away within 7 years, and even in that case, it's dealt with by their estate, not you. So take the $8,000, pay it in as one clean deposit, and ask your son to jot down 2 lines on a bit of paper. His name, your name, the date, the amount, and the phrase. This is a gift with no expectation of repayment. 2 minutes of writing. That's the difference between a clean file and an awkward interview. The third situation is the one that upsets me the most, because it catches people at moments when they're already vulnerable. Moving your own money. Perhaps you've lost your husband or wife and you're consolidating accounts because managing 2 of everything feels overwhelming now. Perhaps one bank is offering a better rate and you're shifting your savings across. Perhaps you're simply tidying up your affairs as you get older, which is a very sensible thing to do. This is your money. You've already paid tax on every penny of it. You've done nothing wrong at any point. And yet, if you shuffle it across in small pieces over several weeks, the software doesn't see a careful pensioner tidying their finances. It sees the same pattern it would if a criminal were slowly moving dirty money. The answer is the same as before. Move it in one clean transfer if you possibly can. Keep the statements and from both accounts. Keep the transfer confirmation, one movement, one paper trail. No pattern to worry anyone. Right, quick moment. If you've made it this far and something is starting to click for you, hit that thumbs up button. Not for me, but because YouTube pushes videos with real engagement out to more people, and there are honestly thousands of pensioners, small business owners, and families out there who need this information before they make a mistake they can't undo. One tap. Then let's carry on, because there's more you need to know. The fourth situation is inheritance. Let's say your sister passes away and leaves you £20,000 from her estate. For most families, there's no tax for you to pay on receiving it. Inheritance tax, where it applies at all, is dealt with by the estate before anything ever reaches you. So the money landing in your hands has already been through that process. If the executor gives you a check, life is easy. But if for some reason it arrives as cash, the danger is exactly the same as everywhere else. Spread it out over weeks, and the system sees structuring, not grief, not inheritance. So you put it in as one deposit, and you keep a copy of the grant of probate, or a letter from the executor, or something from the solicitor handling the estate that shows where the money came from. File it away and forget about it. The fifth situation surprises a lot of people. A large, legitimate lump sum arriving from a completely official source. Perhaps you've deferred your state pension and a backdated payment lands. Perhaps you've taken your tax-free lump sum from a private pension. Perhaps it's a compensation payout or an insurance settlement or an investment that has finally matured. The money arrives properly in one large amount, straight from a regulated source. That's absolutely fine. The mistake people make is to panic at the sight of a big balance and start moving it around into smaller pots to spread the risk or tidy it up. That shuffling is exactly the movement the software watches for. Leave it alone. The pension provider has records. The bank has records. Everything matches. Don't invent a problem that didn't exist. Do you see the thread running through all 5? In every single one, the safe move and the natural move are opposites. Your instinct is to be quiet, to spread it out, to keep it small so nobody notices. But the safe thing is to be loud, to do it all at once, to carry your proof with pride. In this country, transparency is your armor and discretion is your downfall. That feels genuinely upside down to a lot of us, especially those brought up to think it's rude to talk openly about money. But it is the truth, and it might be the single most valuable thing you take from this video. Now let me walk you through some practical realities that have shifted in the last year or two because the ground really has moved under our feet. The first is that banks have quietly brought in their own limits on how much cash you can pay in, quite separately from anything to do with crime reporting. And these limits vary wildly. Some of the larger banks will happily take £20,000 a day over the counter. Others have capped personal accounts as low as $5,000. Paying in through the post office, which so many people now rely on because their local branch has shut its doors, often comes with its own tighter cap. Some banks restrict post office deposits much more heavily than their own branches, with yearly limits sitting on top of the daily ones. The regulator, the Financial Conduct Authority, has been quietly leaning on the banks to tighten these limits up, specifically to make money laundering harder. So if you have a genuinely large sum to bank, the sensible thing is to make a 2-minute phone call to your bank before you go anywhere. Ask 2 simple questions. What's my cash deposit limit, and what would you like me to bring to prove where the money came from? That single phone call can save you an embarrassing trip to the counter and a refused deposit. The second recent change actually works in your favor for once. From earlier this year, new rules came into force to protect people from what's become known as debanking. That's when a bank closes your account or refuses to keep dealing with you. Under the new rules, banks now have to give proper notice and a clear explanation before shutting an account down, with only very narrow exceptions where a genuine criminal investigation makes it impossible. That's a real improvement. For years, people were having accounts closed with no warning and no reason given. This doesn't override the tipping off rules, so if there's a live money laundering concern, they still can't tell you everything. But for ordinary closures, you now have far more right to a proper explanation than you did before. The third thing concerns the taxman directly, because people constantly muddle up crime reporting with tax investigations. HMRC has a power called a financial institution notice. It allows them to go directly to your bank and demand your financial records, without needing to ask you and without needing your permission. And your bank is not required to tell you they've handed anything over. Now, this isn't about cash deposits as such. It's a tax inquiry tool. But it reinforces the same lesson from another direction. The authorities, whether they're chasing crime or chasing unpaid tax, can see far more of your financial life than most people realize. And they can do it quietly. Which means the only sensible strategy is to make absolutely sure that anything they see tells one clean, consistent, honest story. You cannot control whether they choose to look. You can absolutely control what they find when they do. Let me give you a few words now about what to actually say and what never to say when you're standing at the counter with a large deposit. Because this is where I see the second most common mistake after structuring. The cashier will ask you where the money came from. This is normal. They are trained to ask. It is not personal. The correct response is short, honest, and calm. I sold my car. It's a gift from my daughter. I'm consolidating my savings. One clean sentence, and then hand over whatever piece of paper backs it up. What you must not do is 2 things. First, don't ramble. Don't launch into your entire life story, your late husband's estate, the argument with your brother, the operation last spring, the whole lot. The more you say, the more there is for someone to write down. And a long, anxious explanation reads very differently on a file than one calm sentence. Second, and I cannot stress this enough, never say anything like, I didn't want to go over a limit, or will this get reported, or is there a way to do this so it doesn't flag up? Those words are radioactive. They can end up written straight into the very report you were trying to avoid, because they sound exactly like the words of someone who knows the rules and is trying to sidestep them. And if a well-meaning cashier ever offers to split the deposit up for you to make it easier, the answer is a polite but firm no. Always no. Pay it in as one amount. And if the worst does happen, if you ever get a letter or your account is suddenly frozen or someone from an agency contacts you about your banking, I want you to remember one thing above everything else. Do not try to explain yourself on the spot. Do not sign anything they put in front of you. Do not answer detailed questions in a panic, no matter how badly you want to clear it all up. However certain you feel that it must be a simple misunderstanding, hold your ground. You say one thing and one thing only. I'd like to take advice before I respond. Then you find a solicitor who deals with proceeds of crime and financial matters. That instinct to prove your innocence by talking right there, right then, is completely natural and almost always a serious mistake. Get proper help first. Because here's the beating heart of all of this, the thing I most want you to walk away with. The report is not the crime. The watching is not the crime. The whole enormous framework, POCA, SARs, freezing orders, bank limits, none of it exists to catch a 72-year-old market trader paying in his honest earnings. It exists to catch drug money, fraud money, and the truly dirty money that pours through this country every single year. The problem is that the system, the software, the algorithm cannot tell the difference between a real criminal hiding money and a frightened pensioner taking bad advice from a well-meaning nephew. It doesn't see intentions. It sees behavior. And the single behavior that makes an innocent person look guilty is breaking the money up to avoid attention. So don't. Pay it in whole. Keep your proof. Tell the plain truth in one short sentence. Do those 3 things and you will sail through every one of these situations without so much as a ripple. Because clean money with clean paperwork, moving in plain sight, is the most boring thing in the world to the people doing the watching. And in this arena, being boring is exactly what you want to be. Before I let you go, let me give you one small practical thing you can do this week that will protect you for the rest of your life. It'll take you about 5 minutes. Start a folder, paper or on your computer, whichever feels comfortable. Call it something simple like proof of where my money came from. And from this point on, every time a meaningful sum lands in your account, anything more than a few £1,000s, put 3 things inside it. First, a single line in your own words. Received £8,000 from my son David as a gift, 14th of June. Handwritten or typed, it doesn't matter. Second, the document that backs the story up. The bill of sale, the gift note, the probate letter, the pension statement, whatever proves the source. Third, the bank statement or transfer confirmation showing the money going in. That's it. That folder is your entire defense. And the wonderful thing is, you will almost certainly never need to open it. But if you ever do, if someone questions a deposit from 3 years ago, you will be extraordinarily grateful you spent those 5 minutes, because you'll settle the entire matter with one folder instead of 4 months of misery. There is no age that exempts you from any of this. There's no, I've been honest my whole life exemption, however much there should be. The rules apply to everyone. But the people who keep their records clean and their deposits whole are the people who sleep peacefully at night, because they know that if anyone ever asks, the answer is sitting quietly in a drawer waiting to speak for them. I've watched too many good, honest people dragged through stress they never deserved, simply because nobody sat them down and explained how the machine actually works. So if you know someone, a parent, a neighbor, an old friend who's about to sell a car, come into a bit of money, or clear out a lifetime of savings, do them a real kindness and pass this video their way. A quarter of an hour today can genuinely save someone months of heartache tomorrow. And do tell me down in the comments, have you ever paid a large amount of cash into your bank? Did the cashier ask where it came from? Did you leave feeling reassured or a little bit unsettled? I read every comment, and the stories you share often become the next video I make. That's it for me for today. Look after yourselves, look after your paperwork, and I'll see you in the next one.